Those cuts by those central banks, along with falling rates, puts our Federal Reserve back in the spotlight. Steve Liesman takes a look at whether the Fed is under even more pressure now to cut rates.
Normally, the central banks in Thailand, New Zealand, and India would not be seen as big global movers and shakers, not like the Fed, the ECB, and the Bank of Japan. That wasn't the case today when those three central banks sent a signal heard around the world as they cut interest rates either unexpectedly in the case of Thailand or more than expected in the cases of India and New Zealand. That was part of what sent global bond yields careening downward, eventually taking stocks with them for most of the day. The message to markets, the possibility that we're in the middle of a race to the bottom on interest rates around the world. In fact, President Trump even encouraged it today. He tweeted out today, "Our problem is a Federal Reserve that is too proud to admit their mistake of acting too fast and tightening too much, and that I was right. They must cut rates bigger and faster. It would be much easier if the Fed understood, which they don't, that we're competing against other countries, all of whom want to do well at our expense." Whatever their motivations, central banks around the world, from Russia to Australia to Brazil, have been cutting rates and doing so since at least April. Here in the United States, markets expect further rate cuts from the Federal Reserve. Futures markets trade with a 100% probability of a September rate cut, another quarter point expected in October, and even a third one expected in December. The Fed knows it can't maintain rates that are so far from other countries. The problem may be that if it cuts, other banks will simply cut more. For Nightly Business Report, I'm Steve Liesman.